morning or afternoon, depending on when you're watching this. This is Tom Alexander. This is the stock market update for the week of August 12th, Monday, August 12th. And we are in a absolutely fascinating time. I don't know where we are in the bigger picture in my estimation, my 4 years of experience. I think we're somewhere in 1998 to 2000. I don't know which. And if you go back and you traded during those times, or you look at a chart, fascinating times. A lot of fun to trade right now. A lot of interesting things going on. I think we're going to have a really, really sharp move next week. Let's get into why I think that. Okay, we're going to start with the view of the profile. Now, the profiles you see on my screen, this is each profile unit is 1 month of trade. Now we had this, those of you that have been following my weekend updates week to week to week know that way back I say way back, 6 or 7 weeks ago, I started talking about how vertical the market was in the second quarter, how unusual that was, showing the profiles. And by the way, you can go to the website, alexandertrading.com, click on weekly updates. It's free, and you can go back and you can look chronologically and follow the analysis up to this point. I think you'll find I'm very consistent, and you can judge for yourself whether or not I'm accurate. By the way, please subscribe to the channel. I'm trying to grow this thing. That would be very helpful. Like, comment, all of those things help the algorithm. Thank you. Okay, the commercial's over. Okay, so each one of these profile units is chronologically defined by 1 month of trade. Each letter is 1 day. And what we have over the past now month and a half is a rotational market, which we were overdue to have. Now it's been whippy up and down. That was sort of expected and really something I had been suggesting was going to happen. Now, where are we? If we look at this view, it really doesn't highlight how whippy this thing has been. Let's go over here and look at the bar charts. Now, here's the NDX. I landed on the NDX, so I'll talk about the NDX first here. And what we have is a market that is just panic bid, consistently panic bid. And it has been that way since the April low. For instance, this last little dip and rip. So from the August 1st low into Friday's print high, we're up over 4%. Okay. And that's in like 1, 2, 3, 4, 5, 6 trading days. It's just incredible. Now, we can go a lot higher, but we're not going to go higher at this rate of change. Off the April low, this is fascinating stuff, guys. Again, I haven't seen stuff like this since the late 90s. Okay, we're up not quite 43% off the April low. So extrapolate this out. Is this going to continue into the end of the year? Well, again, if we're in 1998, maybe. I don't know. But you don't have to know to make money in any time frame trading. All you have to do is understand the market. If you understand the auction market process of development, you know this rate of change, even this rate of change provides opportunities on both sides of the market. Now, the current little leg here we have up 4%. That's very likely sooner rather than later to truncate into a more two-sided trade like this, or like this, or like this, or like this, etc. You're not going to go up, even if we go up another 42% by the end of the year, you're not going to go up at the rate of change we've gone up the past 6 days. And I can get into the weeds on why, but I'm not making a wild ass guess. That is just not how markets work. So you're going to get, as vertical as this market is, you're going to get pockets where this thing rotates and becomes two-sided. Now, we haven't been two-sided, obviously, for the past 6 days on a day-to-day basis. Intraday, a little more so. So this is the NDX. There is no resistance above current levels. I don't use magic numbers. I think that's nonsense. Gann, Elliott wave, all these Fibonacci projections, extensions. uh, if that works for you, that's great. By all means, continue to use it. But I don't think it works. It doesn't work for me. I've never seen it work for anyone that actually trades. Now, again, if it works for you, great. Okay, let's look at the SPX. And it's a very similar view. Now, the SPX didn't make it to a print high. It almost double topped at an all-time high. This was the all-time closing high right here. I think we were maybe a fraction just below it. We're right at an all-time high in the SPX. Okay. So if you look at the SPX and NDX, it's just up, up and away. It's all good, blah, blah, blah. However, there is a bigger market than just those two indices. They're 8 to 10 to 12 stocks that are driving the NDX and the SPX, and the other indices are, excuse me, are lagging. That has to change. Let's look at the New York Composite. This is the broadest of the indices. Now, the New York Composite formed this inverted V top up here and had the big drop that has led to a recovery, to complete recovery and new all-time highs. The NDX and the SPX are on the cusp. But what we've done in the NDX, and this is even more clear in the other indices that I'm going to show in just a minute, we've sort of built balance in here. So this is very compressed. And this is why I think there's going to be a really, really, really sharp move next week. This is one of the reasons. Okay. This is the New York Composite. All right, let's look at the Dow. The Dow was in a very similar position from a structural perspective as the New York Composite. Okay, so we have the Dow here in a balance area that's very similar. We've looked at the New York Composite. We looked at the Dow. Let's look at the Russell. Same situation. You have a balance area here. You have a buying tail. You have a selling tail on either side of this. Now, all of this all of this is building up into the case for an extremely sharp move next week. Okay. We have the NDX, the SPX just going dead vertical and nothing else. Everything else is in balance. Now, is everything about to explode higher and the NDX and the SPX are going to go even higher than they are? Well, that's a possibility. You have to understand and respect that. Some things have to happen, though, if this market is going to go higher. Let's take a look at that. All right, here are the internals. Now I use real simple stuff, NYSE data. This is the red is those of you that are new. This is a 10-day moving average of NYSE advancing issues. Green is a 5-day moving average advancing issues, and down here is breadth. Now look at breadth, and I'm going to show you another view of this in just a minute. But look how, I mean, it's just tiny range the last 4 days of last week as the SPX and NDX have gone vertical. Now, I get it. 10 stocks are driving those. That's why you don't see the Russell, the RSP, the NYA participating because of this right here. This is more representative of those indices than it is of the SPX and NDX for the obvious reason. Okay. Uh, Let me show this view. Okay, this is an SPX 30-minute chart. This is breadth. Now we had the big expansion in breadth back on the 4th and into the 5th, and then it just died. And so what we have now, we have a very narrow range of breadth down here. We have a momentum peak here, and the market has just died momentum-wise internally from here. The broader market. Now I'm talking about outside of the two indices are driven by 10 stocks, the SPX and NDX. So, guys, next week, there should be a resolution to this thing. We're going to have the most epic blow off of all time continue in the SPX or NDX, or those two are close to at least a short term top. We're going to get some retracement. And that's what all of this other stuff is reflective of at the moment. But watch the New York Composite, watch the Russell, watch the Dow in the direction they break. So it's setting up to be an absolutely fascinating week. You guys enjoy the rest of your weekend. I'll speak with you again soon.